Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, the 15th of November, halfway through the month already, 2023, 5:55 p.m. Central Time. So you can see we're sitting back a little bit here, but holding well in the 1960s. The dollar was up today. We're getting a little bit of a rally tonight in a few of the currencies, but we're still in that pressure point of, whoa, the Fed isn't going to be raising rates anymore. What's that going to mean for the marketplace? How's everything going to react? Okay, that is where you're at. You're still at the point where, for example, in the Dow, I don't know if you realize it, it's gone up about 650 points in 2 days off of all this information. Another stellar gain today. So, lot to digest. Obviously, big moves in the market often leave. Where do you go back to consolidate them? In the in the energy markets, they're under some pressure here. So not everything is as rosy as it sounds because while the stock market's good, we saw retail sales questionable, not as strong as they could have been. What questions there? What's Christmas going to look like? So for the market, we're up about 1.3% on the week so far at midpoint. When we take a look at the chart, we've come down. We're getting a bounce in the marketplace. The pattern is bearish. You have lower highs, lower lows. The market has rallied back with today's action and failed against the 18-day average of closes, where so often that is the case. You get over the market, you fall to it to figure out what to do. You get under it, you come back to it to figure out what to do. Is 1953.80, the 100-day average, going to be support or not is the big question as I'm reading what's going on. When I take a look at where support is, 1953.80 to 1941.50, the lower Bollinger Band. You'd have to close back over 1979.40, and that from here is about $15, $16 in order to say, hey, we're neutralizing the downtrend. And if the market breaks further, as I said, it could be in that corridor. And are we oversold? Well, we've had a rally, but no, you're still oversold. You've got a reading under 30. And I view in slow stochastics, any reading under 30 is oversold. The gold-silver ratio. So as we come back to this market, it's been everywhere, but the lower it goes, the stronger silver is. I should change this to a silver color. I think I will tomorrow. When we're under that 18-day average, you favor silver. So silver's stronger than the gold. It all happened in the past 48 hours where silver just grabbed on and came alive and the gold market fell. That's really what happened, and you see that right here. Silver went from as low as $21.92, almost $2 higher at today's peak in the market. A lot of short covering, but what are you caught in? Can you not see it crystal clear? You're caught in the upper and lower Bollinger Bands. You have been restrained by this each time, and if you look at the green line, the 100-day average of closes. Are we trending? You are not. You're getting waves of money moving in and out, stop orders getting hit. You've ended a bear campaign. I don't know that you've begun a bull campaign. How's that for the analysis? And the same is true in the copper. You have a market that keeps getting up to the upper Bollinger Band and running into a brick wall, going nowhere, then giving you breaks back to the 18-day average. It's again overbought. Don't know what's going to come out of our two presidents meeting, Biden and the president of the Chinese, President Xi. Which way is that going to go? We haven't heard too much other than they're at least talking. And I have to tell you, that in itself, having a summit is a win. It does no one any good for the two biggest economies in the world to not be talking. There are differences. They can voice what they are. We can agree to differ, but you don't need an enemy out of it. It would also be good to open trade in some manner, but that's going to require so much on the Chinese part to open and be a fair trade partner. They're not. When you come over to the platinum market, lower highs, lower lows, a bounce where the pros are waiting. They're probably doing a certain amount of selling here. Stops over these highs, still looking to see can they get to 847. Speaking of this, there's more votes going on in the UAW. You saw what happened in the Senate where Sean Fine almost got into a fist fight with one of the senators. I mean, that's pretty craziness. He would have got his butt kicked, to put it mildly. This guy, the other senator, is a black belt, young, from Oklahoma, and looked pretty rough to me. And when you look at all this, though, I'm seeing how the votes are going. Now, in Texas, just a small amount, but it cleared. Why not just get this thing done and put it behind everything already? In the dollar index, I think short covering took place today in a big way. You went down yesterday to the Bollinger Band. You went and kissed today the 100-day average of closes and bounced right over. Yes, you've broken the back of the bulls in this market. You haven't given yourself a setup yet to get short that I'm reading on the chart. You're oversold, but now the bias is all to the downside. Got to wait for charts to reset. And that's what happens, by the way, in events like we've just gone through. You get markets, and out of nowhere, let me come back here, out of nowhere, they do something you weren't expecting and the market wasn't expecting. I'm going to repeat. Yesterday's CPI numbers were not in themselves big numbers to do this. They were down 1/10 in core and in the headline CPI. But the idea that the Fed is done, and we've discounted that so many times, but now really done, very important. And now the question is, what's going to happen with employment numbers and the like? And the market then will get bullish again if employment stays super strong. They'll say, where's the recession talk that so many analysts are still talking about and you don't seem to be getting? We are seeing chunks of slowdowns and things, but that offers the opportunities. And what do I mean by that? You've ended a wave in certain markets in the thinking of where interest rates are going. The market's now rethinking all that and putting it in. Do you just buy the blind rally? I was watching Kramer tonight, and of course, he's telling the second day you buy all the secondaries. I think you let things simmer down, and then you decide. But I do think the lows are behind the market, but I've thought that for a long time anyways, if you'll remember all my different reports. Tomorrow, and probably the rest of the week, is going to be where pivot points take over. Why? You get 2 days back-to-back of these big reports. Now we get secondary reports. You get jobless claims. Other numbers are all coming out, but they'll feed off of this type of action. A pivot point is a center line. You probably have this study. And then from the formula, which uses today's different set of numbers, the open, high, low, close, you determine, and the formula's already done for you, and you probably have this, supports and resistance points. And what you're trying to do is sell, you're trying to buy into the supports to sell against the center line and sell at the upper zones trying to get back to the center line. I tie it together with momentum, which is not something I've seen other people do. And I do it in a very certain way. And I made a free course because I want to teach you how I teach. And this course is a video course. We also can give you access to charting software if you haven't had our charting software, and you work with it, and all of a sudden you go, oh, there's something. That's pretty interesting. And it's for day trading. It is not a position trading tool. It can be used, and I use it, for better entry points on position trades. So that is how I go about using it. IraEpstein.com under free offers. Move your cursor to the top here. You'll see a cursor, an icon come up. Give that a click, and it'll take you right there as well. I'm Ira. You have a good day.